Hello, and welcome to Profiles in Risk. This is your host, Tony Cañas, back from vacation today. And I have with me Hamesh Chawla, the co-founder and CEO at Mulberri. Hamesh, thank you for joining me today. How's it going?
Thank you, Tony. It's. Thank you for hosting me today. It's a pleasure. I'm a bit under the weather, but I was pretty excited to join this podcast of yours. So here I am.
Excellent. Me too. It really. Before we started recording, we talked about how it seems that the flu is going around, and it definitely, like, several people in my family are down, and I've got a super runny nose that I'm doing my best to keep in check. So Hamesh, it looks like you are in Northern California, right?
That's correct. So we are in Sunnyvale. Our office is
Silicon
situated
Valley.
there. Silicon Valley. I've been in California for the last now more than 2 decades. Since the time I graduated from Texas A&M, I came to California, had my first job here, and then we have stayed here since then. We are about 25, I mean, Sunnyvale, it's about, 30 miles south of San Francisco. So that's where we are.
Awesome, beautiful area. And while most of the country freezes in December, Northern California, probably just sweater weather.
Yes, that's what we pay. The other cons is we pay through our noses,
Absolutely. So we always give the guest the chance to give the elevator pitch. So what is Mulberri?
Sure. So Mulberri is an embedded insurance marketplace, which essentially streamlines the workflows of the PEOs or the payroll providers. And I'll talk about the PEOs and the payroll providers in a moment. But it streamlines those workflows as a SaaS platform while providing an insurance marketplace for their small, medium businesses to procure workers' comp and other P&C lines, as well as cyber through our platform. So in a nutshell, that's who we are. And truly, I think if I have to take a little bit of a step back, and the way we sort of started this is a different approach that we took to this sector, Tony, which is we started with distribution first, and really then going into what are the products or what is the solution that we want to build to attack this distribution. And what we found a year and a half back, which is where the Mulberri got started, was there is this PEO industry, and the PEO industry is it's called the professional employment organizations or the payroll providers, and these payroll aggregators or providers provide payroll services or HR services for their SMBs. And in addition to that, what they also have to provide is workers' compensation, which is mandatory for these small, medium businesses. And that's where we found a distribution angle, where we said that if we go in, Tony, and become that SaaS platform to simplify the workflows of these payroll providers and provide them a marketplace for which they could then offer workers' comp, because it's mandatory. They cannot provide a payroll or HR service to the SMB without providing workers' comp. But if Mulberri is that platform to provide workers' comp, and then can we cross-sell other insurance types through our platform, which is cyber, GL, PL, and other P&C lines. So that was the strategy and how Mulberri was born. What we are not is, we are not a direct storefront. So we are not about offering the process to end SMBs to come and buy insurance through us. We are truly an embedded play, and we depend on the relationship and the trust between the PEO and the SMB to have a solution or insurance provided to them. And the benefit we enjoy is the distribution, which is, one payroll provider could be serving hundreds to thousands of SMBs, and that becomes a TAM immediately once we land into sort of a business opportunity with a payroll provider.
Okay, and how many payroll providers are now partnered And is there a particular size of payroll provider that you target, or is it basically anybody that's doing that?
Hey, excellent question. We do not target a size. So essentially, we go after, there are about 600 to 700 payroll, sort of these professional employment organizations across the nation. So we target pretty much the entire spectrum. And today we've got about close to 12 to 13 payroll providers on our platform. And we are in the process of now growing each month in that sort of ecosystem. And we have seen, we have payroll providers from, about 100 small, medium businesses to more than 10,000 small, medium businesses. That's the range we have seen in the partners that we have today on the platform.
Okay, so before Mulberry, how were those partners providing workers' comp?
Again, a great question. I think those partners, typically what you see in this industry is they have the master programs, wherein you have master group rates or master insurance policies that these partners are able to provide, to their small, medium businesses. And that's a standard rate in a master program that, you can only have the SMBs adhere to that. Where Mulberry comes in is, it says that, okay, I can give you choices, options. So yes, you have a master program that you're being served, but at the same time, look, Mulberry now has relationship with the likes of AmTrust, Markel, employers. So can we bring in others on the platform as well and give them choices? The second element, Tony, also is we are able to sort of facilitate in a very automated manner all of this. Right? Because as you have done now so much and you're sort of an expert in this field, you realize that much of the insurance complexity is in the transfer of information to begin with. And of course, there is code bind and post bind services, but really the transfer of information is, for instance, to write a workers' compensation today, you have to answer 40 questions. And plus each carrier will have 10 other questions or whatever other questions they have. Right, so we as Mulberry, in addition to providing them the choices, can also what we do is we integrate with their payroll instances. So we are able to get the information that we need to construct the payload and then automate the master submissions, and along with providing them choices to the market carriers as well. So there is an efficiency play for them as well, plus a choice play. And in addition, then there is a cross-sell play. Because you can then now have additional insurance types, which, since they were not on the minds of these payroll providers before, because it's not mandatory, so why to, go there? But if it's there on the platform, it becomes a good choice.
So now they have access not only to mandatory workers' comp, but also EPLI, or employment practice liability, GL, small business owners products. Interesting that you're already offering professional liability, because those are a little bit harder than the traditional PNC. And also I see that you've got kind of a big section on the website about cyber, like so you're not only offering cyber, but you've got a custom cyber program. So tell me about that program.
I think excellent question, Tony. Cyber, it's very funny. Cyber was never on my roadmap or on our roadmap to begin with, because we started with workers' comp and we said, much like any other PNC, we'll advance in GL, PL, and EPLI and such. But what we quickly realized after launching workers' comp in last November was that cyber was becoming an increasing need in these small, medium businesses. If you look at the world 3 to 4 years back, you will look at a small, medium business and ask yourself, why would a yoga studio or a small restaurant at the corner of the street buy a cyber policy, right? The exposure is so less. But I think over the last 2 to 3 years, and seeing all the macro trends and some of the breaches we have seen, there's a lot of awareness in the small, medium businesses. And plus these payroll providers as well have now incentive to sort of have their small, medium business buy this insurance, because if you protect the entries into your network, you're protecting yourself as well. And so that's the other element that is happening, which is why, we saw an opportunity there to help on cyber, these small, medium businesses and the payroll providers. And so, in fact, our second insurance line after workers' comp was cyber to begin with. And we had to reshuffle our roadmap to get that out. And, we coming, of course, we've got some deep cyber expertise as well in our team. And so, we wanted to just not offer just a cyber insurance coverage, but really help these small, medium businesses on the protection angle as well. So this is where, we formed a partnership with a three-way partnership with Cowbell, which is one of the carriers that sits behind us, or the MGAs, actually. It's an MGA, and we provide their products, and along with the other carriers that we have. And then Qualys, which is the leading endpoint detection vendor. We partnered in three ways to bring some protection tools to these small, medium businesses as well. So for instance, if you buy, cyber through our platform, you're also given an option to enroll into a 30-day trial with Qualys through our platform. And then, of course, if you want to purchase that, you can certainly purchase that through them. But really, that's the gamut that we're going after. Can we combine both protection and insurance and make it a program, which is how we are trying to sort of go after it. You must have seen the press release as well by Cowbell a couple of months back. I think at IEC that happened, where we announced adaptive cyber insurance, which is essentially a note of all three of these folks coming together and saying, well, if the SMBs, can we form some kind of a credits wherein if the SMBs follow the guidelines in terms of any patching the vulnerabilities or all the findings that they have through the scans, then, can we give them credits which can be applied to their renewals and such? So we, AKA, essentially what we're doing is we're taking a holistic approach in terms of, well, let's not just focus on insurance, but also look at protection.
Makes sense. And you've got quite a bit of carriers already. You've got Amtrust, Markel,
Yes.
Employers, the Hartford, Chubb. So a lot of the traditional players, and then also Next, Foresight, Cowbell, Coalition, a lot of the insurtech players. Are you still open to other carrier partners? And if so, what does that process look like for other carriers that might want to partner with you?
Excellent question. I think we absolutely are. Essentially, because we are not limiting ourselves in terms of the appetite that we serve, right? So just like as you asked before, our appetite can go from a restaurant to a hotel to maybe, a beauty salon, as much as, or the industries that these payroll providers serve. So I think the more carriers we have, that's advantage to us and the carrier as well, for them to be able to put their products out on our marketplace. For us, I think one of the key elements, though, is that we want to integrate with carriers who offer APIs or who have some kind of digital footprint, because truly we want to stay at least. We do understand that the entire quote and bind process sometimes is not automated because you get into referred states and you have to have more clarification with the underwriting groups of those carriers. But we do want to have some kind of automation, be it just a quote or be it just and maybe the bind process can be done manually. But so that's one key element for us before we embark on a relationship or agreement with any carrier, that whether the carrier can offer us digital integration through APIs, which is the core tenet of our platform.
Okay. So only a year and a half in, you've got quite a few things already launched. What else is coming down for the future that you're able to share about?
Clearly, I think we want to ensure that we are able to serve these small. Our footprint in the small medium businesses is growing through these payroll providers. So first, we want to ensure that we are able to bring them and serve as many appetites as we can for these small medium businesses along the core P&C lines. Our cyber is becoming a very important line for us. to serve these small, medium businesses. So we want to ensure that we have the right appetites being served. And then I think eventually we want to also cross the bridge as we move into our strategy next year, wherein, do we want to go deeper into one stack? And so let's say, do we want to become a workers' comp MGA and become the provider of products? Since we have learned so much through this year of becoming that marketplace, but can we go deeper in one stack and become that provider as well to help our small, medium businesses?
Okay, so you've got excuse me, you've got a master's in computer science, and then a 20 years of experience in the tech space. So how did you realize that insurance was a place where you were interested in making your next move? Like what how did you realize that there was a need for this?
In my previous tenure, I was heading products and technology there we were disrupting financial services, and we were clearly building wealth management platforms. And what I found was that in financial services, there are some sister segments out there, which is insurance, mortgage, taxes, and such. And clearly to me, I think these sister segments also needed to be disrupted. But for me, it had to be that the distribution had to be understood. I never wanted to sort of create something wherein we are building a product and then trying to find a product market fit, or trying to go with the tech hat approach to say, let's go and disrupt the sector. I think for me, it's always was a business first approach, where do we have the approach wherein we can utilize what we bring into this industry from a distribution strategy. And it was fortunate for us to find this angle of payroll providers, where we saw that workers' comp is mandatory for their small, medium businesses, and these payroll providers have a need to bring as much tech and automation in their workflows. So can we become that platform and in turn provide that? And that sort of started our journey. And we are enjoying that tremendously. Made great progress. We landed our first round of funding earlier this year. We are fortunate enough to be backed by very strategic folks, including MSAD, Excellent Holdings, and HNVR Ventures. And so we are excited to what lies ahead in 2023 for us.
Excellent. Well, thank you very much for coming to the show, and thank you for your time today. Excited to see you guys continue to grow and serve this space of the insurtech world.
Thank you very much. We much appreciate it.
Awesome. Thank you.